Hello, everyone. I am Naoya Kanisaka, the Chief Financial Officer of Moneyford. Thank you, Yosuke, for discussing the overall management policy of the group. Now, I would like to talk about our financial strategies, the improvement of profitability, and our path to positive EBITDA in fiscal year 2024. Next, I will go through the second part of the 4 new growth strategies, which is maximizing synergies across the Moneyford group. There are 2 main synergies within the group. The first one is the growth in sales and improvement of CAC through mutual customer transfers. We aim to maximize monetization opportunities and reduce customer acquisition costs by leveraging a customer base that includes individuals, corporations, financial institutions, and accounting firms. The second is to improve user experience and achieve a lower cost structure through cost group product development and R&D efforts that can be used across multiple businesses within the group. This slide is one that we have shared with investors, but I would like to emphasize it. We have a customer base of more than 400,000 paying users, more than 14 million, including free customers, in our home domain. Our cloud services for corporate customers, which is business domain, is the most popular in Japan with over 110,000 of corporate users. And also we have the largest accounting firm networks in Japan behind it. In addition, we collaborate with more than 40 financial institutions in Japan with respect to product development and have API integrations with all financial institutions in Japan. We believe that our customer base and network are unique and of great value in Japan as we expand our SaaS and fintech businesses. Next, I would also like to showcase our actual cross-selling results between our services. The combined use of the household account bookkeeping application and tax return service has doubled in the past 2 years, with nearly 40% of tax return service customers being PFM application users. The PFM application is the #1 in Japan and actually has a very attractive CAC. Additionally, cross-use with the tax return service is also reducing the CAC of the tax return service. It was crucial to integrate the service into the PFM service through development, rather than simply sending customers. This slide displays the improvement in sales and marketing efficiency in our cloud businesses. In the second half of fiscal year 2022, we saw a significant acceleration in the rate of net customer additions, as on the left-hand side. CAC payback shrank to 22 months, as on the right chart, due to various factors, including the expansions of users through accounting firms, increased our product recognition, improved SEO rankings, stronger acquisition through Moneyford Cloud Company Formation, which is a service for newly established companies, and also a tailwind from the new invoice regulations. This slide is about the Mikatano series. We already have partnerships with more than 20 regional financial institutions. We develop products and they provide a sales force. This approach will improve our sales and marketing efficiency as they already have strong connections with their customers. The products are also based on our knowledge in the cloud space. We may also see opportunities to sell our Moneyford Cloud series to Mikatano customers. R&D efforts are also ongoing. These are selected examples, but we aim to further advance our core technologies such as aggregation, OCR, and credit control to improve the user experience of our SaaS and fintech services and lower costs throughout the businesses. Now, I would like to talk about the future financial outlook. Moneyford has achieved rapid growth over the past decade by effectively utilizing equity finance from the capital markets, including fundraising from the venture capital before going public. Key investment areas over last 18 months are sales and marketing for AR growth acceleration, product development to enhance ERP lineup, and strategic M&As. In the next decade, while we do not exclude financing from the capital market as an option, it is crucial for us to become a company that can generate positive cash flow through our business operations. This slide highlights what we consider important from that perspective. The first priority is to achieve strong growth through disciplined investment. Our CAC payback is already below 24 months, and we aim to maintain this level while experiencing higher growth. Cross-selling and increasing LTV through transactional bidding will also be important. The second point is to enhance profitability and concentrate on cash flow, which involves retaining the high sales growth mentioned in the first point, and also controlling the ratio of sales and marketing and also R&D to sales, and enhancing the ability to generate cash flow. At Manifold, we have annual contracts that guarantee cash flow in advance. We will work on these issues as well. Thirdly, we will work towards establishing a solid balance sheet, which is necessary for stable business operations. In recent years, we have been working to improve our liquidity by increasing long-term borrowing. We have a great relationship with banks, and our interest rate is less than 1%, so we will take advantage of the low interest rate environment in Japan. Let me reiterate our outlook for the future. The plan we announced in January 2022, which states that the company will continue to grow sales at a CAGR of 30 to 40% over the next 3 years, remains unchanged. Fiscal year 2022 was a year of 45% SaaS ARR growth, and that was the foundation for continuous growth. In fiscal year 2023, we expect 27 to 29 billion in sales and 28 to 38% of growth ratio. In page 22, in fiscal year 22, we also significantly increased our advertising expenses, as resulting in an EBITDA loss of 6 billion and the EBITDA margin of negative 28%. However, as previously reported, we will return to EBITDA profitable in fiscal year 2024. Now, let me share the path to fiscal year 2024 EBITDA positive. Please take a look at the historical ratio of cost to sales. We actually recorded positive EBITDA in fiscal year 2021, and at that time, the advertising cost to sales was 17%. Again, in fiscal year 2022, advertising expenses were significantly increased, leading to a ratio of 31%, while our revenue grew by 37% due to the significant increase in advertising expenses. The ratio of personnel expenses and outsourcing expenses also increased. Going forward, we anticipate that the pace of personnel increases will be much slower than the sales growth, and also the absolute value of advertising expenses will be maintained at the current level. This approach will allow us to maintain high growth while improving margins and returning to the profitability. Another important aspect disclosed in the financial results is the gross profit margin of the SaaS business. In JGAAP, expenses for engineers and designers involved in product development are included in COGS. To make a fair comparison with other global SaaS companies, these expenses have been excluded in this management accounting basis. In this calculation, we include server costs, API connection costs, customer support personnel costs, etc., that are directly linked to sales as COGS. Even in fiscal year 2022, when the company significantly increased its investment, the gross profit margin remained at 83%, well above the 80% benchmark, and the gross profit surpassed JPY 10 billion. We believe that the growth of SaaS sales with a gross margin over 80% will result in a substantial improvement in operational leverage and margins. Finally, let's take a look at the balance sheet snapshot. Due to the equity finance in 2021, Manifold continues to hold ample cash and net assets. Fiscal year 2023 will be another year of upfront investment, but we have a robust balance sheet to support this. As previously mentioned, our financial strategy is to increase cash balance and enhance liquidity by using long-term debt and to prepare for potential M&A opportunities. Additionally, we use the balance sheet in our finance businesses, but the risks are hedged through insurance contracts. However, if the balance sheet expands in line with business growth in the future, off-balance may need to be considered. Our aim to maximize shareholder value through effective balance sheet management. That concludes my presentation. Thank you very much for your attention.